How can you invest in companies like Facebook, Amazon, Apple, Google, etc. from the comfort of your home? This is what we will see in this particular video. If you stay till the end of this video, you will also see step-by-step instructions on how exactly you can do it. So let me quickly share my screen and I'll tell you how exactly you can invest into the companies which are listed in the US stock market. So first of all, let us understand why it is required to invest in the US stock market. I mean, Indian stock market itself is enough to give you good returns, but then why should someone invest in the US market? So there are two reasons. Number one, if you want to invest in the biggest companies in the world, like Amazon, Facebook, Apple, Google, these companies have become part of life for almost every person living on this earth, right? If you want to participate in the growth of these companies by becoming an investor, then yes, you have to invest in the US market because these companies are listed in the US market, New York Stock Exchange, Nasdaq, and all these places. Second reason, if you want to take advantage of the dollar appreciation. What do I mean by this? I mean that if at all the dollar appreciates in value, let us say today a dollar is 70 rupees, okay, and tomorrow if dollar appreciates, $1 will become 80 rupees or 90 rupees or 100 rupees, okay. So whatever investment you have done in the US market, it is already gaining some value, it is already increasing in value, right? But apart from that, if you are also getting advantage of the dollar appreciation, so when you get your funds back from the US market to the India, the value will be even more because of the dollar appreciation. So instead of getting 70 rupees per dollar, if the value has increased to 80 rupees, you will get 80 rupees per dollar, right? So with that, you can take advantage of the currency difference, and if at all there is a change in the currency values on the other side, like if the dollar appreciates, definitely you can make some extra returns. So I see these are the two major advantages why should someone invest in the US market. So I also invest in the US market, so I will tell you my exact process how I do it. But before that, let us see few more issues around this topic. So next issue which comes is taxation. What about taxation? How are we going to pay the taxes when we sell our shares in the US market? So let me tell you, India and US, they have an agreement called Double Tax Avoidance Agreement, DTAA. Alright, and according to this, tax will be collected only by one country. So if one country has collected a tax, the other country will not collect the tax again, and the person can claim the can show the tax deducted by the other country in the tax filing. So for example, you have bought US shares and now you sold those US shares, and suppose US deducted some taxes. Like, so in the US also there is a concept of LTCG, long-term capital gains tax, which is deducted at the rate of 20%, and short-term capital gain tax, which is counted as your money. Whatever the profit you make, it is counted as your income. So suppose US deducted these taxes at the time of selling of the shares, and now you want to declare them in India while at the time of filing your ITR. So at the time of filing the ITR, the broker through which you have invested in US will give you a document, will give you a report of what all different taxes the US government has already deducted from your account. And when you show these reports to your CA, they can do that tax adjustment in the India itself. So you don't have to pay the taxes again. Alright. So that was on the taxation. Now let us see what are some of the rules with respect to the investment abroad, sending the money abroad, which is very important for you to understand. So let us first of all check what are the do's, what you can do. So as part of the liberalized remittance scheme by the RBI, you are allowed to send $250,000 a year to any foreign country per annum. This limitation is per annum, $250,000 per annum, which comes around 1.5 crores, right? Which is enough in most of the cases. Second thing, you can use this only for legitimate activities, like for example, kids' education, or you want to invest in the companies abroad, then you can do this. Now let us see what are some of the don'ts, what you should not do with this scheme. So it is not for illegal activities. Of course, you cannot fund the ISIS or other terrorist organizations by doing this fund transfer, right? So that is number one. And second, which is important for you to understand, RBI says that this LRS scheme should not be used for speculative activities. And what is a speculative activity? Gambling is a speculative activity. You cannot transfer funds abroad for doing gambling. And also, if you are doing options, if you are doing option trading abroad, there are many banks who will create issues to get your fund back if you have done options trading. Some brokers don't even allow option trading for Indian residents. Some allow. So this option is a little gray area. I would suggest you to not do this option trade in the US market or any other market apart from India, because in many places it is considered a speculative activity and you may have trouble getting your fund back to India. Alright, so we have seen why you should invest, what is the taxation aspect, what are the rules, the do's and the don'ts, and now we will see how exactly you can invest. So let me show you my go-to platform, my favorite platform, and this is Vested. So I use a platform called Vested. This is the website, vested.co.in. So you click the start investing, and after that they will ask you to fill up some forms and all. Some KYC process will be there, and once your account is open and ready, after that you will get and once you log in inside it, you will see a dashboard like this. So Vested does not charge any commission for the stocks that you buy or you sell. It is a zero commission platform. Okay. Now, what are some of the charges that you will have to incur? Let me tell you. Before that, let me show how you can exactly buy shares in this platform. Okay. The charges and the transfer of the funds, I will come to it later. So once this is the platform, they have their mobile app also, so you can use their app also to do the trading or investment. But right now I'm showing in my desktop version. Let us say I want to invest in Apple. Apple stock symbol is AAPL, and this comes here, and it shows me what is the current value, 178.44. It shows the chart. Below it shows the returns. Just a minute. I have to log in again. Yeah, so Apple we were looking at. So it shows what is the current value. It gives you an overview. You can see the chart of various time frames. They also show you some returns in various time frames. They'll show you some fundamental data, income statement, balance sheet, cash flows, key ratios, all these things they will tell you. If you don't understand all these things, it's okay as of now. And when you want to buy this, what you have to do, simply click this buy button over here. So when you click this buy, just mention what is the number of shares you want to buy. So let us say I want to buy only one share. It will tell me what is the estimated cost, and you have to tell what is the type of order. So if you want the order to get executed when the exchange opens at whatever price Apple is trading at, you place a market order. But if you want to buy only at a certain price, for example, I don't want to buy at 178. I want to buy at 170. So I'll place a limit order. Okay, in that case, I will say what is my limit price. So I will say it is 170. So market is 178 and I have put the limit as 170. So this is a demo account. I have not funded this account as such. So it's showing me don't have enough cash. Yes. So of course you have to buy. Before you can buy the shares, you need to have cash in the account. And only when the stock price comes to 170, it will be assigned to me. So this is the limit order. So we have seen market order, limit order, and stop order. You can place stop order when you want to sell some shares. Okay. So same way, if you want the shares to be sold when the price comes down to, let us say, 170, then your shares will be sold. All right. So this is your vested platform, how you can buy and how you can sell the shares. Now let us see how you can transfer the funds. Okay. So when you want to transfer the funds, you will come to this tab called transfer. And here you can see there are two buttons, add funds and withdraw funds. So when you click add funds, you can add any bank in this platform. I have added HDFC Bank. So proceed with HDFC Bank. I will just simply click that. Whatever is your bank, it will tell you what is the bank with which you have to proceed. Okay. And after that, it will ask you how much you want to deposit. So let us say I want to deposit $1,000, approximately 75,000 rupees. And I will do next, and then it will tell me to download some instructions. Yeah, so it gives some instructions on how exactly you can do the remittance step by step in the HDFC account. Simply follow these steps here, and it takes about 4 to 5 days for the funds to come to your brokerage account, like vested account. So that means when you initiate transfer today, after 4 to 5 days, you can expect the fund to be ready in your account so that you can purchase the shares. And let's come to the charges section. What are the different charges? So the charges as such are nothing from the vested on this platform side. They have no charges on the trades that you are doing. However, the charges will be levied by the bank to transfer the fund from your Indian account to the dollar account inside vested. So they will take some transfer charges, like foreign currency conversion and some exchange charges they will take, which comes to be around 1500 to 2000 rupees. Okay, and it does not depend on the amount. Like the same amount 1500 you will have to give if you want to transfer 1 lakh, and the same 1500 2000 rupees will be there even if you want to transfer 10 lakh rupees. Okay, so that is the only charge. And same way, when you want to withdraw your capital from vested to your Indian account, that time also some transaction charges will be levied by the intermediary banks. Now let us see how you can withdraw the funds. So just now we have seen add funds. Next to it there is a button called withdraw funds. Simply click here. It will tell you how much cash you have in your account. Right now it is showing $0 in my account. As I told you, it's a demo account. And I will mention, let us say you have $1,000 in your account and you want to withdraw all the $1,000. So you have to mention $1,000 here, how much amount you want to withdraw, and there are some charges. So as you can see here, there is a intermediary Drive Wealth, which is charging a $11 withdrawal fee, and some banks may also charge additional fees on top of this amount. So as I told you, it will come around 2000 to 3000 rupees max. Okay, that's all. And after that, you have to say next. Yeah, of course, I don't have the funds, so it's giving me the error. But when you do next, it will again give you a document, a written instructions on how exactly you can do the withdrawal from the account. Okay, so we have covered the need for investment in the US, why it is considered beneficial in certain cases. We have seen the taxation aspects of the investment in US, we have seen the how exactly we can do the investment using this brokerage platform, and we have also seen what are the different rules, do's and don'ts when it comes to investment in the US market. So that's all I wanted to cover in this video. I hope you got some value by watching this video, and now you should be able to invest in the US market confidently. Okay, so thanks for watching, and if you have not subscribed to the channel so far, please click the subscribe button and let me know in the comment box what did you feel about this video and what other content you want me to create for you. So thanks for watching and take care. Have a good day. Bye bye.